I'm a funded day trader, and in this video I'm going to show you how to pass a prop firm challenge and maintain profitability using the silver bullet strategy. Now you're only going to be looking for one setup on one pair at one time of day. Okay, so what sessions are we going to be trading? We're going to be looking for trades in the London AM and PM session. You're probably wondering what times are these. Don't worry, I'm going to show you when we're on the real chart examples. First step. Monitor your direction and the draw on liquidity before each session. So around half an hour before our session opens, we're going to watch price action and get a general idea of what the trend is like overall. The second step is pretty simple. We're going to wait for a 5-minute fair value gap to form in your 1 hour window. And the simplicity of the strategy is unmatched. You're literally waiting in a 1 hour window for a specific setup to form. And if that doesn't show, then you don't take a trade. Quite simply, for shorts, highs need to be swept. For longs, the lows need to be swept. So what do I mean by this? If we're going to be looking for a long trade, for example, and we see relatively equal lows build up like this, we want to see these lows get taken out before we jump in for a buy. So something like this, and then we look for a buy setup. And again, we want to make sure that our bias is overall bullish and our draw on liquidity is higher for this to happen, because another thing that I see happening quite a lot, especially with new traders, think that this move to the downside is only a liquidity sweep to continue higher, where in reality that may be a break of structure to the downside to continue pushing down. So therefore all the traders who went long here were then stopped out of their positions. So you got to be careful of that. And when we get into the chart examples, that's where it gets more technical, and you need real data to understand how that works. So when we get on the charts, I'm going to show you not only the difference between a liquidity sweep and break of structure, but also how not to get faked out with the direction. And also in our private Discord mentorship with full access to all the education that me and Sniper Ads provide, you get access to both of our courses and live trading with us daily, with also Q&A access 24/7. So make sure you go ahead and check that out in the description below. And remember, if you want to pass your challenge 100% guaranteed, otherwise you don't pay a single penny to us, then go ahead, click the link in the description below. We have been doing free challenge passing for a while, so the offer may still be on whilst this video is out. Click the link in the description below, join the Telegram group. It's limited spots only, so it's a private group. Make sure you go ahead and check that out. Now for our actual entry and stop loss and take profit placement, our stop loss is going to be below the fair value gap if we're looking for longs, and above the fair value gap on the 5-minute if we're looking for sells. And our take profit, what I found with this strategy is that 1 to 2 risk to reward ratio works very, very well. You will usually see your take profit being hit within that 1 hour window. And if your take profit doesn't get hit within that 1 hour window, that's completely fine as long as the trade is still valid. Now let's get straight into the actual chart examples. We're going to be on Euro USD on the 5-minute time frame. I'm going to show you multiple examples of this playing out. And just before we do that, remember a few key liquidity points are previous day highs and lows, previous week highs and lows, old liquidity, so old highs and lows, and then relatively equal highs and lows. Just take a note of this or screenshot this, because this is going to be a very helpful cheat sheet, you could call it, or checklist to look for when you are taking trades with this silver bullet strategy. And if you want to get a fully funded account, we will pass the challenge for you 100% guaranteed. You don't pay a single penny until after you pass. And the best part is we're offering free challenge passes for the next 10 people only. It's a private group, so you have to request to join this group right here. We only work with reliable firms, and as you can see, we've got loads of proof of this firm paying out right here. So make sure you go ahead, get a funded account guaranteed with prime funding, use the code ICT at the checkout, and make sure you join this group. Remember, the next 10 people is going to be completely free challenge passes, and after that you don't have to pay us a single penny until after we pass the challenge for you, and until you see the fully funded account for yourself. So make sure you go ahead, join this group right here. There's loads and loads of proof, reviews and testimonials for you to go ahead and scroll through and check, do your due diligence on this. And as you can see guys, we have been doing this for the longest time, and loads of clients have been funded with us at the Funded Fast service. And remember, our signals room is still going strong as we're offering analysis and trades on all markets. So we mainly specialize in GBP, JPY signals, but we're also introducing new pairs and other markets like gold, forex, and also futures and indices. So make sure you go ahead and check this out. As you can see, take profits are being smashed right here, and we are the most consistent in the game. We've been running this for the longest, and we've never had a losing week. You guys can go ahead, scroll up and learn from all of these trade ideas right here. So make sure you go ahead, click the link down below. It's literally $30 a month for live trade ideas and updates daily. So make sure you go ahead and check that out. We're going to be more active in the signal zoom as well, and I'm also going to be sending market breakdowns and analysis videos specifically into this Telegram group right here. And don't forget to join the Discord in the description below. $150 a month for the complete mentorship package. Okay, so let's jump into the chart examples, and my time is set to the New York time zone, which you guys can go ahead and do. And this relates to another key point that I'm going to say, the actual time windows that we're going to be trading. So the London session is going to be from 3 a.m. New York time to 4 a.m. New York time. The AM is 10 a.m. to 11 a.m. and the PM session is 2 p.m. to 3 p.m. You guys can go ahead, screenshot this, write these down, put it in your notes, and this is in the New York time zone. And for our minimum framework for our trade setup to be valid, for indices we're going to look for at least 10 handles, or for forex 15 pips. You're probably wondering, what do I mean by this? Well, the framework for the silver bullet is simple. We're going to look for a fair value gap in a certain direction, ideally towards a draw on liquidity, along with other confluences. And it's going to be more simple when I show you the chart examples. There's lots of chart examples which I can show you, including some live examples as well. Simply, we want to make sure that there's enough room for us to squeeze profit out of the trade. So for example, let's say a fair value gap gets created to the downside right here, and we want to look for shorts off this fair value gap, right? So we're going to look for a sell somewhere along this fair value gap area right here. But look to the left. Our next main liquidity point is around 5 pips away, right? So that's less than 15 pips, meaning there's really not enough of a take profit area in that for us, so it's not worth us taking the trade. So remember, if our draw on liquidity is around 15 pips away, that's fine. So for example, if price was to instead create a bullish fair value gap in this area, you can see our next sort of high is around 16 pips away from this current price, right? So what do we do before our session actually starts? So you're watching price action live, and we're watching price at 3 a.m. And you're probably wondering as well, how many trades a day do we need to take for this strategy? And all you need is 1 trade a day, if that, okay? If a trade shows up, then you take it. If it's not really got enough confluence, then we're not going to take the trades with the silver bullet system. So we're watching price in our London session time window, and if a trade doesn't show up over here, then we move on to our New York session at 10 a.m, right? We look for another trade opportunity at 10 a.m. However, if a trade does show up in this session right here, if a trade does show up, then we're not going to trade the AM session, and we're not going to trade the PM session. All you need is 1 trade a day. Let's just wait for price action to create a fair value gap and to show its actual hand. So as you can see with this right here, it's made a very small fair value gap. However, this was before the time window actually opened. So you can see with candle 1, candle 2 and candle 3, it's made a little fair value gap right here, but 1, there's not enough room for our take profit. As you can see, it's only 8 pips away from the next sort of liquidity point. And number 2, looking at overall price action, right? Let's just analyze price action for a second. We are overall in a ranging market. You can see how price was coming down right here, but it started slowing down the pressure. It has taken liquidity from these lows, and we have seen a push to the upside. But overall, we are pretty much in a consolidating market. So from this area, it makes sense for us to see a push to the upside, correcting the price action overall, and potentially sweeping these buy-side liquidity highs. And remember, this is a major liquidity point right here, because as you can see, this is just a simple old high, and this right here is relatively equal highs, okay? So that's something we're going to keep in mind. Okay, now as you can see, it's made a push up, but this is not a fair value gap for me. Even though it might be very tiny, I'm not going to use that as my confluence for my fair value gap. Okay, now as you can see, price has made a fair value gap right here, okay? However, to the left, there's no opposing fair value gap, and this is a trick that I showed in one of my previous videos, which I'll leave linked down below, so you guys can go ahead and watch that for a secret fair value gap hack that I show in that video. But for this one right here, it has made a fair value gap, so if price retraces into this, I would be looking for a buy opportunity, since this is the first fair value gap created in that session. However, what you're going to see with this specific example is that price carries on pushing to the upside, and it creates multiple fair value gaps. So as you can see, we have another fair value gap right here, and we have another fair value gap right here. And I know this is a common dilemma that a lot of you have. Let's forget about the fair value gaps for 1 second, and let's just look at the overall price action and the overall structure. So looking at price action, it's approaching these highs now, okay, and we have seen a big impulse to the upside. It's not just a normal impulse, it's taken liquidity from these lows, and it's also broken structure with displacement. So therefore, this top fair value gap stands out to me as one of the strongest fair value gaps in this area right here. Of course, yes, the lower lower they are, the lower the fair value gaps are in the discount, the higher probability they are. However, this is what we call a breakaway gap, and I actually share this in my FVG guide, which you guys can go ahead and claim for completely free, and I actually talk about why this is such a good confluence. And essentially, we've seen a valid market structure shift, and we see a fair value gap in this area right here. So what price tends to do is do a short, shallow retrace into this area right here before continuing pushing to the upside. Now, looking at price action, it's already approaching these highs. It's building up more liquidity with these relatively equal highs. So what we're going to do is we're simply going to target either a 1 to 2 risk to reward ratio off this fair value gap area right here. Okay, a simple 1 to 2 risk to reward ratio, and I actually sent this trade out whilst it was playing out to my team. Or you can go ahead and target the overall liquidity highs, which is going to be up here. However, we're not going to be greedy. As you can see, our take profit is going to be around 13 pips. And you can also place a stop loss right below this area right here. Since we already have these fair value gaps, these other fair value gaps, I want to have a tighter stop loss. And if I get stopped out in this trade right here, I'd want to re-enter at the lower fair value gap, which is deeper in discount, because then I know, okay, price is not doing just a short retrace. It wants to grab more liquidity before continuing pushing to the upside. A typical sort of ICT setup that you guys may see: a simple market structure shift, retrace, and then we look for our entry. So let's just see what price does, and let's stick with a simple 1 to 2 risk to reward ratio. So let's just see what price does. Okay, now as you can see, price retraces, fills in that fair value gap, and it does fill it in completely. Remember, our stop loss is not going to be right here. It's going to be minimum at this candle right here, or usually with other fair value gaps, when there's usually only one fair value gap, we place it below all the candles altogether. However, for this example, this is a valid stop loss to have. So let's just see what price does. And as you can see, price is pushing to the upside. It's sort of struggling in this area right here. Okay, now you're probably looking at price action and thinking, why is it hanging around this area so much? Well, for me, this is actually a good sign since we are building up lots of liquidity. However, what I don't like is that our take profit is just above this sort of major high, and we also have a fair value gap here which price can react off to go potentially bearish. So therefore, right, if it doesn't displace above this high completely, then there's a chance we could just sweep liquidity and then push to the downside, right, and potentially test these deeper levels of imbalances. So that's something I want you guys to keep an eye on. You can be a bit more flexible when it comes to a sort of specific scenario like this. You guys can go ahead and maybe target a 1 to 1.7 if you want to be safer. So let's just see what happens if you were to do this. Okay, and as you can see, it just taps us out right there, hits our take profit for just under a 1 to 2 risk to reward ratio, and then as you can see, it starts coming back to the downside. And you're probably wondering, okay, well, price is testing this fair value gap right here. Okay, so what do you do in this scenario since we're not in our time window? Well, what you can do is you can enter, however, just remember you're outside your time window, so therefore the trade isn't really valid following the silver bullet setup. But following price action overall, it does make sense for price to make an impulse, retrace. Bear in mind, we've also taken out relatively equal lows or trendline liquidity, you could call it, in this area right here, tapped into our deeper discount levels. So this would be a potential buy setup right here if you were comfortable taking the trade, or you could wait for some sort of confirmation to then take this trade. And as you can see, it does play out quite nicely, and we do see a push to the upside from our area. And that's the advantage of looking for imbalances that are sort of deeper in that discount range. Okay, so now I'm going to show you another example on the silver bullet strategy of when not to take a trade, right? And I'm going to run you through from the start of the day to the end of the day, because after this video, you guys can do exactly the same, backtest this, and then forward test this, actually live test it in the market. So at London session, you're going to watch your charts, you're going to look at your price action, and straight away on the 5-minute time frame, what we can see is that price is pushing down overall, right? So what we've seen is a sweep of these overall highs right here. We've seen price pushing to the upside like this, and then we've seen lots of displacement to the downside. And what I can tell by this is that logically we're going to see some sort of a retrace to then overall continue pushing to the downside. So I'm not sure if we're going to see a setup in the London session. What we might see is potentially a bullish fair value gap form, a retrace into it, and then continuation push up. However, bear in mind, this would be a counter trend setup. But let's just see how this plays out. Okay, so we let price play out right now. Okay, we've seen a push to the upside. Can the next candle hold as a fair value gap? So if I just get rid of this line right here, okay, you can see that we have this gap right here. Okay, similar to the last setup where we do also have price breaking above this high. If we do see a tap into this area right here, we could continue higher. However, the only thing is that it is a counter trend setup, so it would be a risky trade. There's not really a clear high that we can target and say, okay, this is our clear liquidity point. Okay, now for me, I personally wouldn't take this trade since we have this area of previous structure that was broken to the downside, and price doesn't actually have to retrace up to this point for it to be a valid retrace and then continue pushing to the downside. Price can literally pull back into this area right here, this sort of imbalance, and then carry on pushing to the downside. So for me, this is where I would sit on my hands and not take a trade. So therefore, let's just wait for this London session to finish, and this London session finishes at 4 AM, so I'm going to leave my line right here. Okay, and as you can see, it does pretty much exactly that. So it retraces into that fair value gap, okay, fills it in around the mean threshold, around 50%. You can see a lot of trouble in that area. Lower high was formed, and we saw price pushing down. And anyone who was buying based off sort of silver bullet strategy right there would have potentially been stopped out, especially if the stop loss was here or even lower. Okay, so price has already dropped a fair bit right here. Let me just leave this line on so you guys can tell what the time windows are. So price has already been dropping for quite a while now, and we are sort of seeing structure clearing up. So I'm going to give you guys a little structure lesson right here as well. So you can see with this order flow to the downside, this is an overall push right here. However, within this push, we have multiple levels of structure. So therefore, we call this internal range liquidity. So as you can see, we have short-term highs and lows forming right here. Okay. And now we're seeing structure start to shift to the upside. So therefore, it makes sense for a bullish fair value gap to form, right? And then we can target multiple levels of liquidity. All those short-term highs before can be used as potential liquidity targeting levels, right? So let's let price play out. Let's see where the fair value gap forms first. Remember, if it forms bearish, and there is enough confluences for us to take a trade to the downside, then we may look at that. However, looking at price action overall, it makes sense for it to start pushing to the upside, especially since we have sort of broken and retested this area right here. Let's just see if we can continue pushing to the upside. Okay, and as you can see, we have a fair value gap right here. Similar to one of the last setups that I showed you guys, you can also see we have a sort of breakaway gap. Right, this structure has also shifted to the upside, so you guys can kind of tell what setups I like seeing. Remember, every day is not going to be like this. We're not cherry picking the setups. And also, one last announcement: if you want a one-to-one bootcamp with myself and Sniper Ads, we're only taking on a very limited number of students. So if you are serious and you're ready to learn, ready to fast track your trading success, go ahead, click the links in the description below. Remember, completely free challenge pass for the next 10 people only, and join the Signal Zoom in the description below. And I'm also sending completely free material and gems in this free public Telegram right here, so make sure you go ahead and check this out. I'm just showing you guys areas where the silver bullet isn't really favorable and where I like to trade this setup. So as you guys can see, it's made the fair value gap, it's broken structure, it's overall starting to look pretty bullish. So this does look like a good area to take a buy from, and you can be safer with the stop loss just in case price does retrace a bit deeper and then continues pushing higher. And again, you can put it here just below this candle's low. However, bear in mind that would be riskier because price can retrace, grab a bit more liquidity before then continuing higher. And another question I get asked is, does price have to take profit? Do we have to hit take profit within our time window? And the answer to that is no. You can take profit outside of the time window and just close the trade before the end of the day. If you're still in the trade and it's still hanging about, just close it and then wait for the next day to form its own price action. We're going to target a simple 1-to-2 risk to reward ratio. And remember, I want to give you guys a system, which is why I'm always saying stick to a 1-to-2, stick to a set risk to reward ratio, because guys, if you systemize anything in trading, you will see an improvement. You'll be able to measure those statistics and then improve from there. So if you just stick to a set 1-to-2 risk to reward ratio, you'll see your own patterns, you'll do your own journaling, and the journey is different for everybody. But with a set risk to reward and set take profit system, your trading will improve by so much. So just keep that in mind. Let's see if we get tagged in. Okay, and as you can see, price tags us in right there. Quite an easy push up, and as you can see, within that hour, our setup was done 1-to-2 hit in literally a few minutes. What was this? This was literally around 15-20 minutes, okay? And I'm also trading live with the team daily. I show multiple pairs, multiple charts. We go over the silver bullet system as well as other systems and other strategies that I use on pairs like gold, indices, futures as well. We also trade ES and MQ. If you want a handheld trading journey where you're constantly improving with an amazing group of traders that are always learning and bouncing off each other, make sure you go ahead and join the Discord and the full education. You get access to mine and Sniper Ads' full course. Our students are already killing it in there, and the value that we give in our group you're not going to see in any other groups, guaranteed. We go over everything you need to know, so make sure you go ahead, click the link down below. So guys, thank you all for watching. I really appreciate every single one of you that are liking, commenting and subscribing. Keep up to date with my Instagram stories and things like that, my social medias, because I will be posting more on there, and I'm sharing a lot of value for free on my free public Telegram group. I'll leave the link to my public Telegram down below, and don't forget the link to my Signals room is going to be down below. It's only $30 a month, limited time only. The price will be increasing soon, so make sure you go ahead and check that out. I'll see you guys soon in the next video. Peace.